Welcome to Power Charting. I am your host, Bruce Frazier, and we have a very special episode for you today. This is part one of a tape reading workshop with William Reardon and Roman Bogomazov. They do have a tape reading lab that they do, and they are among the foremost tape readers in the Wyckofian world today. Now, Richard D. Wyckoff took the concept of tape reading, and you're seeing the ticker tape on the left, and actually it's a ticker that it's a long tape of paper that actually showed the quotes in the early days. And he turned that into a concept of chart reading using bar charts and volume. And this is an incredible skill and art. And today, William and Roman are going to introduce this concept to you. And so with this, let me introduce both William and Roman. Thank you so much for being here, guys.
Thank you, Bruce.
Yeah, thank you, Bruce.
And I intend to just get out of the way and let you do what you do so well and really demonstrate the work that you do with your tape reading lab that you both do on a regular basis. Tell us a little bit about that.
Yeah, well, you said something very interesting. Wyckoff and traders of his time used the tape ticker to look at the quotes where they had the price quote and the volume quote. So that's how they read the market. And you said that Wyckoff transitioned that into chart reading. And that's effectively what we do in our Mondays classes. We chart read the tape, and that's why we call this the tape reading, but please don't confuse this to, let's say, level 2 quote reading and so on and so forth. So if you're looking for something like this, this is definitely not the place. But if you're into how do I read the chart correctly, how do I identify the structures? How do I identify the relationship between price and volume? How do I look at different Wyckoff concepts on the chart? That's definitely the class. William, what's your take on the difference between, let's say, tape reading itself and chart reading? What would be, like, in one sentence, your definition or on the difference?
Well, I like to think of our modern chart reading to be efficient as an evolution of the ticker tape. I'm sure if they had the software back in the day that we have, the wonderful aid of technology, they'd be using charting as well. So I just think it's a natural evolution of tape reading, because the price or the tape is reflected with the volume and the bar itself on the chart.
And if you guys like what you see, come to us at wyckoffanalytics.com. We're conducting our tape reading classes each Monday from 9 to 10:30 Pacific. And we usually discuss the current market for quite some time from the tape reading perspective, chart reading perspective. We also discuss a lot of tape chart reading concepts, and we absolutely do at least one exercise per session. So if you have any interest, check it out on wyckoffanalytics.com under the tape reading lab, and William and I will be really happy to receive you as our viewers and students. All right. Well, with this, William, we kind of decided that, let's just do something very popular, something that is on everybody's mind, the Bitcoin.
Indeed.
And on the left, I know you guys right away, your minds are going to go to this, and you see all of those arrows. This is actually the example of our work with William in the tape reading lab, where on a 4-hour time frame, we were just going bar by bar in front of our students, and we were just discussing what is possible there, what's our interpretation. We're going to do something similar here, but in a different way. First of all, we're going to look into this trading range, and we're going to create the case study for the accumulation. And then from there, we'll go bar by bar or, like swing by swing and discuss, as much as possible in these 2 sessions. So William, looking at the beginning, which always starts with the end, right? So the rebirth starts always with the death. So the death to the downtrend right here is being shown to us in the stop in action. So how would you describe this? I mean, like, what catches your eye here? And I think that a very interesting question here, could we, by the selling Climax bar, identify already right away the whole formation as a possible accumulation? And if we can, then how?
I mean, that is the $1 million question. But the first thing that catches my eye regarding the selling climax is the low and the volume. Look how far we close off the lows. Remarkable. There is a huge amount of buying in this bar. But going forward, Roman, I wouldn't be buying that bar. As you know, I do need confirmation. I need to see further signs of potential buying. Oh, bear with me here. Going forward. But the one thing I would say about this, we have shortening of the thrust to the upside. Each successive move is making less and less progress to the upside. Then we come down, we kind of get the shell divers tragedy here, and then we slam straight down. And we can see that the angle of descent has increased dramatically. It's certainly the best selling we have in the chart, but the ending here, and I like what you said there, Roman, it finishes, which is also the beginning, the transition here. And this selling climax for me is, of all the selling climaxes, if you could use the term, a bullish selling climax, due to the volume, again, the highest one on the chart, and the close, there is an awful lot of buying on this bar. I'm not thinking negativity on this bar. I'm not thinking lower prices. I'm thinking I want to see how the market tests in this vicinity, in this area.
Mm-hmm. Well, I think that, this bullishness could be played on, let's say, a smaller time frame. Something like,
sure.
The 4 hour, the 1 hour. And I mean, when you go into selling Climax, you understand the principles behind this. And the principles behind this is that the weak hands are capitulating. And with this capitulation, what they do is they just basically say, get me out at any cost. I don't care. I'm emotionally compromised. So I want to get rid of this position to feel good. So, and not to lose money, obviously. So with that, supply signature is increasing dramatically from weak hands. Now, on another hand, or other hands, the strong hands, which is going to be predominantly the composite operator. This is the Wyckoffian heuristic that we use to identify a herd of institutions that are providing meaningful liquidity to the markets with their buying and selling. So they're already buying. So their demand from their side is increasing tremendously. And the combination of both, where demand is increasing a lot and where supply is increasing a lot at the same time for different reasons. And by the way, for the CO, this reason is going to be value and liquidity itself. Liquidity from weak hands, there is a lot to buy, and at the same time, long-term value, so they're buying. So this is what creates those volume spikes that we're seeing so often as a stop in action. And the tail, the demand tail, is suggestive that once the price hit that 30, 29, 20, 26 level, and we are just seeing a lot of aggressive buying. And from here, we could say that, okay, well, potentially this is a bullish behavior to be confirmed or to fail. And as we go through the trading range, we're just looking for the signs of either failure or confirmation. So, William, you mentioned secondary tests or just testing process.
Testing.
Yeah. So once we've created this stop in action, how do we test through the trading range?
Well, quickly eyeballing this, I think it's just very fair to see. You can just see the buying in this area. And look, what I like to see of this testing action, Roman, is we're not testing the lows. we're testing, we're testing 50% of the, well, we won't call it from the tail itself. Again, I like to consider that additional strength. The market has every right to test down here, but this tells me, well, two things. It's either a lack of supply, selling pressure, or aggressive buying at this level. And due to the tails, I'd say there's buying at this level. And we even spring down here. But the important thing of this testing action I like to see here, Roman, I think the key areas here, these two bars with this volume. This is what I like to see. Yes, we can see that the buying improves from 1 drive to 3, and we do push on up. We can see the buying quality is getting better within this initial trading range. But here, when we come down, on this bar here with this volume, we slam straight down. It's the lowest close in this area. But then the very next bar, we halt. We technically spring this little level here. It halts any downside progress, and we close firm. This, to me, is the read that I need to say, okay, now we need to start looking for positions.
Mm-hmm.
Now
and
I have a bullish license.
And I think this is a very, very important area. So let's just, stop a little bit here and talk about this. I mean, what Wyckoff concept are we talking about here? We have an increased pressure to the downside. We see this in the volume signature. So selling is increasing. And at the same time, we're starting to progress to the downside. William has mentioned the lowest close for the whole formation. That's a significant day. But we also want to make sure that we are judging the result of that effort correctly. And the result we will be judging by several characteristics, whether this is expansion of the spread, we're seeing how the spread is expanding, whether the position of the close relative to the spread, relative to the previous close. Those are all important elements for us in the judgment of the character of the spread. But at the same time, the most important result character is going to be the ability to commit below the support. So in this case, we have secondary tests forming the support that needs to be overcome, that needs to be committed below. That would signify the ability of the sellers to push the price below specific important support levels and have the ability to stay there below. What do we see in this bar? We come close, but we do not overcome it. We come close to the support, but we don't commit below it. And we're going to say that even though the downward pressure, the downward effort is increasing tremendously, the downward result, even though the character of that move is bearish, but the result is actually diminishing. So on the increased effort, we have diminishing result, suggesting the presence of the opposing force. In this case, demand. So we're seeing that demand is coming on the red bar right here, and it's also coming on the next green bar. And the ability of the price to, let's say, temporary committing on the intraday level and recovering the same day, that's a sprint type of action. And we definitely want to acknowledge that this type of temporary commitment and almost instant rebounding has a lot of demand characteristics. So we're confirming here from selling Climax, which had a lot of demand in the demand tail, to this secondary test that also had this aggressive kind of like pickup of shares, to the spring itself, that all of those are bullish characteristics in the areas of the support.
It's also the approach, Roman, which I find to be of value, because we're coming down here. If you think on the lower 60-minute time frame, we're oversold, and this bar itself appears to be climactic, and we can see with the volume. But you have to always ask yourself, as you quietly pointed out, what does this bar actually achieve structurally? Well, it doesn't actually break anything structurally, and if you break it down and understand this trend on the 60-minute time frame, it's climactic. Then the very next bar, it dips under, beautiful little bar to reverse and close firm. It's just fantastic. The whole bullish picture there has unfolded. So contextually, this is now ready. I'll be looking to play
Mhm.
to the long side.
So when we have a sprint position in the possible accumulation, we just basically take that. You could take either the sprint itself
Yes.
without the confirmation, or you could have a point of entry on the test of the sprint. Now, I had a point of entry right here, William, right on that sprint
Yes.
bar.
I remember.
And now, I mean, obviously, in hindsight, I was thinking, this whole area right here, just a little bit more volatile to my taste. And just looking at this whole structure, volatility is an important element of selling, right? So if the structure is too volatile, selling is still present. And I think because the selling, even though this portion of the trading range already shows multiple signs of accumulation, including this rally right here that you've mentioned, I mean, it's still a little bit volatile to my taste. So this point of entry was, I think, great, but a little bit inefficient because we go into the second portion of the trading range where volatility starts to diminish. And this is such a beautiful thing to observe. And I think from that perspective, especially with this reaction, that was such an easy call. You just wait for the reversal bar, which we see as the
Yes.
last bar right here, and then you just go with that. And that was a point of entry number 2. So anything else on the concept of volatility that you could mention here?
Well, what I found interesting about this spring is all this action really from here. It's kind of a complex testing action. Usually from a spring we want to see some form of testing, but as you said here, it's the volatility here still, it's still active. But here, when we see this coming down and we see that volatility decreases, our background, Roman, when you can read and understand these Wyckoffian principles, and we can, we understand the accumulation process going here, this is fantastic to see. This is beautiful to see because it's the sellers that kind of need to prove themselves here. And what do we see? Well, we see a lack of selling. Okay, but when we see this, I think we need to see the confirmatory signal to let the market pull us in, which is over here on this bar, which I believe, did you enter there?
Yes.
Point of
Yeah.
entry too,
So,
yeah. So all of this action it's rather unusual, I must admit, to have this kind of complex testing action, but it is in 2 parts. I think here, and then after stage 1, and then this testing action here is just fantastic. We disconfirm supply all along here. Directly behind us, we have accumulation. We have a buying zone of sorts, which arises from the climactic bar. So very, very nice chart. A slightly nuanced chart though, with the complex testing, but very good to see.
I would say that this area is also very attractive as a precursor to a specific character with which the price should move after this.
Yes. Yeah.
So look at how volatility has diminished so much. So
Yes.
I remember the sentiment because, I've been going through this trading range on Twitter with all our, Twitter followers, and there are always people that are going to be bullish and that are going to be bearish. The sentiment at this spot was predominantly bearish. So you know that as a lot of people are shorting Bitcoin at this point, if the price reverses, and price will reverse under the conditions that institutions are aggressively stepping in and starting to buy. So imagine this scenario here, they're stepping in and starting to buy. What are all of those bearish sentiment traders going to do? They're going to cover their shorts, and as they're covering, that's going to become market orders, and that's going to push the price up. And with that, momentum is going to increase, volume signature is going to increase, demand is going to increase, upward spread is going to increase, and we kind of could, and I hate this word predict, but we kind of could foresee what kind of character we're going to have. Now, with this type of character of the rally, you also could think about where potentially we could go with this rally initially. Mm-hmm. And we probably would be thinking around 41, 43,000 as our first target. We definitely would overcome 36.5. This was a very important level for us to overcome. And that's how you construct your trade, which has not happened yet. It happened in your mind. And if it goes this way, then you kind of, like on the right side of the market. And also, just thinking about like the whole Wyckoff labeling, right? So it's a little bit tricky for those of you who are new. So let's just say phase A, this is the stopping phase with this selling climax, automatic rally, secondary test, then multiple tests, a spring, and then the test of this spring right here as an LPS, last point of support. So if we're going to have this rally, we're going to have some kind of sign of strength rally, either a minor sign of strength rally or a major sign of strength. Okay, well, William.
Well, there's
Yeah.
one thing I'd like to add here. With this testing, and in a sense, as we can see, we disconfirm supply here. When we have this reversal bar, we have to be thinking, well, if there's no supply in the market, and this is exhaustive, this is an exhaustive move for supply, we can, in my mind's eye, I'm thinking, well, we should push up relatively easy. And we wouldn't need to see big wide spreads with heavy volume because there is no supply in the market. Ergo, we can push up on fairly low volume, and that doesn't illustrate a lack of demand. It's just a precursor to a lack of supply in the market. So naturally, I'll be thinking this is all white space from here up to this level. The natural place for the market now to find sellers will be at this resistance level. So
well, we also could kind of a little bit foresee the way how where we could potentially incur some supply presence. So we would look at the previous decline. So for instance, these bars right here have some increase in selling. I see that this bar right here also has that initial off the top selling. I see this bar as also, off the top selling. I see this bar, and obviously the climactic action itself has those characteristics where supply is increasing. So this is the emotional memory by the sellers where they sold. What do you think they're going to do in this area right here, even before we come to this, 41, 43 level? So as the price goes through 36.5, which was an important level, but this is just an initial level to overcome. Once we come to like 39, we have to have some emergence of the supply. So we have to be on the lookout for that supply and just understand what is the result of that supply. Could it be absorbed really quickly, and could the price go to 40, 43? If it does, then it creates a much more bullish case rather than just like incurring the supply and coming back into the support area. And that's what we're looking for.
Yeah, so when we get to a resistance level, we just need to observe the quality of selling at that level. But we do have, as you noted here, this 36.5 level. It'd be interesting to see if we get to here, how does price interact here? And if we break on through, or we have a little, if we absorb perhaps a little more, but unlikely to absorb here, Roman, because all of this here is absorption. There's just a lack of selling pressure.
Yeah, I would say that at the lower level, William, I mean, as we look at the selling climax, secondary tests, spring, the test of the spring, and then the lack of selling, that kind of suggests to us that this area right here of the absorption has been completed. So we're just gonna go through this very easily, as you said. I think that the next obstacle is in the upper part of the trading range right here. So somewhere here we should see the presence of the supply, and then we should make the judgment. Well, with that, let's just go forward. Now we're gonna unfold the chart, and the first 3 bars is something of an interest to us. Why? Because I mean, usually, William, in yours and my works, we see how students come to us, and the question about these 3 bars is something like this: how is it possible that the price is going up and yet demand is diminishing? Isn't that a contradictory to the technical analysis fundamental concept, fundamental tenet about the volume and price action, where the volume confirms the price, meaning that with the expansion of the demand, the price should be increasing. And here we're seeing something opposite to this. So give us your answer to this.
Well, I think I've answered that previously. This move originates from the context behind us, where there is a lack of supply in the market. It's been exhausted. And our background condition is of strength, Roman. Accumulation around here. complex testing, eradicate supply, then we push it up. The market doesn't need high volume to, in this environment, the market doesn't need high volume to grind its way higher. I can't express this any simpler. I know the common consensus is that we should push on up with increasing spreads, with increasing volume. Yes, that's a characteristic which is context dependent. But here, given our current background, this kind of move is expected. I'm sure that we spoke about this in the tape reading lab. This is what we want to see.
All right. Well, I'm going to quickly give my interpretation of this.
Okay.
I mean, obviously, when supply is exhausted, the price can go up with even less demand. So we don't have to have less demand. But I think that the next question in the sequence of this logic is, well, why is there such a low demand? Well, guys, we've just discussed elements of where the buyers came in at the support level of the selling climax, then at the secondary test, at the sprint, at the test itself. And buyers are somewhat exhausted, even though they've been buying aggressively. But going into this area right here, they're not buying too much. So it's just an element of the selling being so exhausted to the point where the trend is starting to get established just off a small increase of the demand that starts to push the price up. And then we don't see a lot of buying because the buying is exhausted as well. But if this is a truly the beginning of the new uptrend, then we should start observing the emergence of the demand, because a lot of systematic models of money managers and just the traders in general are going to indicate that this could be a potential emergence of the new trend, and specifically above this area right here. As we go through, we should have some kind of big bars with the big increase in demand signatures, and that would again confirm, a bullish scenario. So
that I agree with, because you want to see a commitment through structural areas. Like, there you go, like this. That's exactly what we need to see. Yeah.
So let's talk about this bar, because it's a very, very significant bar in different elements of it. First of all, the spread, up spread is increasing. We have an immensely big volume signature. And then we have a huge supply tail with the close below 1/2 of this bar. So we would be saying that supply finally has emerged, and it has emerged in the place that we were talking about in the upper part of this trading range. So what do we do now, William?
Well,
this is a good place to look to end part one, because here we are pushing up to this important resistance level, and everybody should know that we're going to continue this discussion in part two. And so you must stay tuned for that.